Oggi parliamo con Fabrice Jacob di La Francaise che ci parlerà dei mercati asiatici e in particolare ci darà una sua view sui mercati in cui è più interessante oggi investire. Good morning, Mr. Jacob, and the word to you.
The question is?
The question is which Asian markets you think are more interesting in this moment?
Right. Well, today China is slowing down. It is a market where you have to be very careful where you put your money. You have to look for investment opportunities that are clearly away from the indices. I mean, most indices in China are completely focused on banks, oil companies, and telecom companies, not to mention China Mobile specifically. And these are typical sectors that you really don't want to be exposed to simply because oil price is coming down, because China Mobile story is over, penetration being now at 100%, and because the banking sector is not particularly sexy these days because of all these questions on shadow banking and the underground financing. So if you move away from the index, you can find great opportunities within the mid-cap sector, especially into the industrial sector or the consumer discretionary sector. What's important is to meet the companies that you want to invest in, get to know exactly what they're doing, and basically buy stories. Look for stories, in other words, companies that are benefiting from whatever circumstances are taking place right now that help their business models. And there are a number of situations like that. So that's on China. China is very cheap, by the way. China today is the second cheapest market after Korea, trading at around 9 times earnings. So despite the macro slowdown that we see everywhere, with GDP growth at 7.7% in the first quarter and possibly 7.5% by the end of this year, we still see a lot of value opportunities within the Chinese market, once again, as long as you don't stick to the benchmarks. And so that's on China. Other opportunities, well, Southeast Asia, I know, has been correcting quite steeply over the past couple of weeks. The Filipino market, for instance, is down 10%, same as the Thai market. Nevertheless, they remain very interesting countries. Philippines, for instance, is still the best performing market year to date. It's up about 15 or 16% so far. And we still see a lot of value in the Filipino companies. The macro picture of that country is probably the best story you can find across Asia. It's a country that has been completely forgotten by investors over the past 20 years, and I think it is definitely worth a look. You may or may not know it, but Philippines actually had the strongest growth in Asia in the first quarter at 7.8%. The growth was even higher than the growth of China. This is the first time ever that it has happened. Now again, on the Philippines, it's a little bit like in China. Philippines is an expensive country, but what is expensive is actually the index. What you have to do is to focus on companies that are below the index, below the usual suspects. I'm also quite bullish on Malaysia. Malaysia is a country that has been completely underweight by most portfolio managers over the past year, ahead of the elections that took place a couple of weeks ago. Now that the elections are over and that the worst case scenario did not happen, it is time to go back into the Malaysian market. And actually so far in June this year, Malaysia is the only market that has gone up when all other markets have been going down. So we have a re-rating story about to take place in Malaysia, and we're quite bullish on the overall picture of that country. We're also turning gradually bullish on Korea. Korea is a country that has suffered, of course, from the global slowdown because it's an exporter. Having said that, a lot of people were fearing that the drop of the Japanese yen would have had very drastic circumstances or impact on the exporters from Korea. Well, if you look at the export numbers from the first quarter of this year, the Korean exporters did actually very well because exports went up by 3.1%. When it was actually down in the fourth quarter last year. And the simple reason is that the main victims, should I say, of of the drop in the Japanese yen have not been the Koreans, like most people feared, but it's actually the Germans, because all the Japanese products that you can see here in Europe or in the US, most of them are actually made locally. I mean, Toyotas are made locally, Sony products are made in Thailand or in Malaysia or in China. They are not made in Japan anymore, which is why the impact of the drop of the Japanese yen on the Korean economy did not happen. And now is the time to look again at Korea and possibly overweight that country.
Thank you. And could you just name some companies where you now see some opportunities?
Well, yes. In our China fund, which is LFP JKC China Value, our biggest position is a company called Sony Optical, which makes camera lenses and camera modules for smartphones in China. This is a company that is growing exponentially. We've had that company in our portfolio for the past 2 years. It has already tripled in value, and I think there is a lot more upside to it because it is completely under-owned by portfolio managers, as it is still a very small company with only 1.4 billion market cap. When it comes to Asia, I quite like the media sector. I like the media sector in the Philippines with ABS-CBN. I like the media sector in Indonesia. Actually, we have MNC, Media Nusantara. I think the media sector is a sector that is moving very fast with the rate cards and basically the price of advertisement going up very strongly throughout Southeast Asia. And our Asian fund, which is LFP JKC Asia Value, is definitely benefiting from these trends in Southeast Asia.
Thank you.